Hey there, future millionaires. Welcome to the Passive Income Journey 777 channel, and let's talk about investing. You're young, you're ambitious, and you want to make the most of your money. Smart move. The earlier you start investing, the better. It's like planting a tree. The sooner you do it, the bigger and stronger it grows. Time is your greatest asset. Seriously, it's more valuable than any stock tip or get-rich-quick scheme. Compound interest is like magic. It's the interest you earn on your interest, and it snowballs over time, making your money grow exponentially. The sooner you start, the more time your money has to compound and grow. Investing isn't just for Wall Street hotshots, it's for everyone. Whether you're saving for a down payment on a house, your dream vacation, or a comfortable retirement, investing can help you reach your goals faster. So buckle up, and let's dive into the exciting world of investing. Okay, so you're ready to invest, but where do you even begin? The world of investing can seem overwhelming at first, with so many options and strategies to consider. There are tons of investment options out there, each with its own risks and rewards. Let's break down some of the most popular ones to help you get started. Think of stocks as tiny pieces of ownership in big companies. When you buy stock, you're essentially buying a small slice of that company. If the company does well, the value of your stock goes up, and you make money. Of course, if the company doesn't do well, the value of your stock could go down. Stocks can be volatile, but they also offer the potential for high returns over the long term. Everyone needs a place to live, right? Investing in real estate can be a great way to build wealth. You can buy rental properties and earn passive income from rent, or you can buy properties, fix them up, and sell them for a profit. Real estate investments can provide a steady income stream and potential for appreciation, but they also require significant capital and management. Then there are retirement accounts. These are special accounts designed to help you save for retirement. There are different types of retirement funds, like 401(k)s and IRAs, each with its own rules and tax advantages. The key is to start saving early and take advantage of any employer matching contributions. The earlier you start, the more time your money has to grow. The world of investing is vast. You can also explore options like bonds, mutual funds, exchange-traded funds, ETFs, and even alternative investments like cryptocurrencies. Bonds are essentially loans you give to companies or governments, and they pay you interest over time. Mutual funds pool money from many investors to buy a diversified portfolio of stocks and bonds. ETFs are similar to mutual funds but trade like stocks on an exchange. Cryptocurrencies are digital or virtual currencies that use cryptography for security. Just remember to do your research and understand the risks involved. Diversifying your investments can help manage risk and improve your chances of achieving your financial goals. Whether you're just starting out or looking to expand your portfolio, there's an investment strategy out there for you. Happy investing! Compound interest is like the secret sauce of investing. It's the reason why starting early is so crucial. Here's how it works. Imagine you invest $1,000 and earn a 10% return in the first year. You now have $1,100, but here's the cool part. In the second year, you earn 10% on $1,100, not just your original $1,000. As you can see, compound interest creates a snowball effect. Your money grows faster and faster over time. The earlier you start, the more time your money has to compound, and the bigger that snowball gets. Even small amounts invested consistently can grow into significant sums over time. Ready to take the plunge? Here's a step-by-step guide to making your first investment. What are you saving for? A down payment on a house? Early retirement? Having clear goals will help you stay motivated and choose the right investments. You can't invest if you don't have any money to invest. Track your income and expenses to see where your money is going, and identify areas where you can cut back and save more. Before you start investing, make sure you have 3 to 6 months' worth of living expenses saved in an easily accessible account. This will protect you from unexpected financial emergencies. You'll need to open an investment account with a brokerage firm. There are many different brokerage firms out there, so do your research and choose one that's right for you. Once you have your account set up, it's time to start investing. Begin by investing small amounts and gradually increase your contributions over time. Section 5. Rookie mistakes. Don't fall into these traps. Investing can be intimidating, and it's easy to make mistakes, especially when you're just starting out. The world of investing is vast and complex, and without proper guidance, it's easy to feel lost and overwhelmed. Here are some common mistakes to avoid. These pitfalls can derail your financial journey if you're not careful. First, investing without a plan. Jumping into investments without a clear strategy is like sailing without a map. You need direction. Don't just throw your money at the latest hot stock tip. These tips can be tempting, but they often lead to poor decisions. Have a solid investment plan in place that aligns with your goals, risk tolerance, and time horizon. This plan will be your roadmap to success. Next, trying to time the market. Many believe they can predict market movements, but this is a dangerous game. It's impossible to consistently predict when the market will go up or down. Even experts get it wrong. Instead of trying to time the market, focus on investing consistently over time. Regular contributions can smooth out the highs and lows. Then, putting all your eggs in one basket. Diversification is key. Spreading your investments reduces risk. Don't put all your money into just one stock or asset class. This can be a recipe for disaster if that one investment fails. Spread your investments across different asset classes to reduce your risk. Also, ignoring fees. Many overlook this, but it's crucial. Investment fees can eat into your returns over time. These small percentages can add up significantly. Pay attention to the fees charged by your brokerage firm and choose low-cost investment options. Every dollar saved on fees is a dollar earned. And finally, giving up too soon. The market can be volatile, and it's easy to feel disheartened. Investing is a long-term game. Patience is essential for seeing substantial growth. Don't get discouraged by short-term market fluctuations. These are normal and should be expected. Stay the course and ride out the ups and downs. Don't panic, your long-term strategy will pay off. Stay informed and stick to your plan. Knowledge and consistency are your best allies in the investment world. Section 6. Building your financial fortress. Investing for retirement. Retirement might seem like a lifetime away, but it's never too early to start planning. The sooner you start saving for retirement, the better. Compound interest is your best friend when it comes to retirement savings. Take advantage of retirement accounts like 401(k)s and IRAs. These accounts offer tax advantages that can help you save more for retirement. If your employer offers a 401(k) match, contribute enough to get the full match. It's free money. Section 7. The power of diversification. Don't put all your eggs in one basket. You've probably heard the saying, don't put all your eggs in one basket. This is especially true when it comes to investing. Diversification means spreading your investments across different asset classes, industries, and geographic regions. By diversifying your portfolio, you're reducing your risk. If one investment performs poorly, the others can help cushion the blow. It's like having a safety net for your investments. Section 8. Stay informed, stay ahead. Resources for the savvy investor. The world of investing is constantly evolving, with new trends and opportunities emerging every day. It's important to stay informed about market trends, new investment opportunities, and changes in the economy. This knowledge can help you make more informed decisions and potentially increase your returns. Luckily, there are tons of resources available to help you stay ahead of the curve. These resources can provide you with the latest information and insights. Financial websites and apps. Websites like Investopedia, Yahoo Finance, and Bloomberg offer a wealth of information on investing, from basic concepts to advanced strategies. These platforms are great for both beginners and experienced investors. There are also numerous investment apps that provide real-time market data, research tools, and educational resources. Apps like Robinhood, eAstrus and TD Ameritrade can be particularly useful. Books and podcasts. There are countless books and podcasts on investing, covering a wide range of topics and investment styles. Whether you're interested in value investing, growth stocks, or real estate, there's something for everyone. Find authors and podcasters whose approach resonates with you. Some popular choices include books by Warren Buffett and podcasts like The Investors Podcast. Financial advisors. If you're feeling overwhelmed or need personalized guidance, consider consulting with a financial advisor. They can offer tailored advice and help you navigate complex financial decisions. A qualified financial advisor can help you create a customized investment plan based on your individual goals, risk tolerance, and financial situation. This personalized approach can be invaluable in achieving your financial objectives. Section 9. Your journey to financial freedom starts today. Investing might seem daunting at first, but it's one of the most important things you can do to secure your financial future. Remember, you don't need to be a financial expert to get started. Start small, invest consistently, and don't be afraid to ask for help along the way. The power to build wealth and achieve your financial dreams is in your hands. So what are you waiting for? Your journey to financial freedom starts today.